nothing went wrong. No crash, no war, no shocking headline. The economy was growing, markets looked calm, experts sounded confident, and yet, banks stopped trusting each other. Money stopped moving. Entire countries froze. Not because something bad happened, but because nothing new happened. That's what no one warns you about. Financial crises don't start with disaster. They start with doubt. When people imagine a financial crisis, they imagine chaos, red charts, people panicking, markets crashing on TV. But that's the end of the story. The beginning is quiet. So quiet that most people don't notice, because when a crisis truly starts, everything still looks normal. Here's a strange question. If nothing bad happened, why did everyone panic? Why did money disappear when factories were still working, people still had jobs, and shops were still open? What actually broke? The answer is uncomfortable, because the thing that failed was not physical, it was mental. The global financial system is not built on money, it's built on belief. Belief that loans will be repaid, belief that markets will keep working, belief that tomorrow will look like today. As long as people believe this, the system survives. The moment belief weakens, the math stops working. Let's make this simple. Banks don't lend money they already have. They lend money they expect to get later. Governments don't fully pay their debt. They replace old debt with new debt. Markets don't wait for certainty. They assume things will stay stable. Everything depends on timing. Short-term borrowing supports long-term promises, and this works only if nobody panics together. Here's the hidden truth. Most debt is not meant to be fully paid. It is meant to be rolled forward. When a government bond ends, new debt replaces it. When a loan expires, it is refinanced. This is normal, this is expected, and this is fragile, because the moment lenders hesitate, even for a short time, the whole system starts shaking. Not because someone failed, but because the future feels uncertain. Why bad news is not needed? Here's the twist. Crises don't start when things get bad. They start when things stop improving. Growth slows a little, profits stop rising, interest rates move up slightly. Nothing dramatic, but confidence changes. And once people expect trouble, they act in ways that create it. The self-fulfilling loop. If you think others might pull their money, you pull yours first. If you think banks will stop lending, you stop borrowing. If you think money will become scarce, you rush to safety. Each decision makes sense alone. Together, they destroy the system. This is how fear becomes reality. 2008, simple version. In 2008, housing did not collapse overnight. Problems were growing slowly, losses were manageable. What broke was trust. Banks stopped trusting each other's numbers, so they stopped lending. And when banks stop lending, the economy stops breathing. No explosion, just silence. Why this keeps happening? Every crisis looks different. Different year, different country, different excuse. But the structure is the same. Too much dependence on perfect timing, too much belief that things will always stay stable, too little room for doubt. The system is not built to handle fear. It is built to ignore it. Myth versus reality. People blame greed. They blame corruption. They blame bad people. But most crises don't start with villains. They start with incentives. When survival depends on confidence, confidence becomes forced, and forced confidence is dangerous. The uncomfortable math. Here's the number people avoid. Global debt is bigger than global income. which means full repayment is not the plan. Continuation is. As long as belief stays strong, the system survives. When belief breaks, there is no backup plan. Why this matters today? Today's system is faster, more debt, more connections, more dependence on short-term trust. Future crises won't look loud. They will look quiet. Frozen markets, delayed payments, money that suddenly stops